Hey, hello everybody. It's day number 53 of the $1,000 account challenge, and today we're up $818 or 8.95% in the account. I took two trades today, but I want to focus really on the Tesla trade because we were trading live this morning with that trade, and I was scaling into that trade, and I feel like it's a really great example of how to properly scale in to an entry. So let's talk about the trade, why it was on the watch list. I'll give you a little breakdown of the background of this trade and then kind of move into it from there. So off of the day trade watch list this morning, Tesla was a short idea below 195 or a long idea above 200. And what I said in the comments was still on watch here for relative weakness following yesterday's drop. So we're going to move this to the 5-day, 5-minute time frame. Tesla ran up last Friday to $208, just below the 200 EMA on the daily chart time frame. Over the weekend, it reported the company reported delivery numbers, and the market reacted to those delivery numbers with a negative sentiment, in a bearish way. So we had a gap down going into Monday, and then yesterday had a drop while a lot of stocks were actually closing near the high of day that it had printed on yesterday. So Tesla was showing relative weakness right off the bat, and we traded this yesterday. We made a video on this Tesla trade. So if you go through the Discord server and go down to Spartan videos, what is relative weakness, you will see why we took the trade on Tesla. Now, going into today for the 1K challenge, I was looking for this weakness to continue. A lot of the market actually gapped up this morning. SPY had a little bit of a gap up. A lot of stocks were gapping up and trading near the pre-market highs, right? If we look at something like Meta had gapped up into new highs, kind of pulled back just before the open, but it did make a higher high in the pre-market. Microsoft, higher high in the pre-market. Tesla, SPY, right? Higher high here in the pre-market, while Tesla did not make a higher high. It kind of just rallied up to that $200 whole number. Now, what do we know to be true about whole numbers? Whole numbers act as natural points of support and resistance within the market. So understanding that to be true, Tesla long above 200 makes sense, right? This morning, Tesla opened up, had a green candle here, fairly big green candle there, but could not press any higher. So this opening rally immediately gets sold, and it brings it back down close to the low of day. Then the very next candle drops this below the previous day's closing price and below our trigger level. Now, on the day trade watch list, remember, we had a short under 195. So let's draw a trend line right there. Why would we take Tesla short below 195? Well, because it was a gap up play. On gap up days, gap down days, we typically look towards the previous day's closing price as a potential point of support and or resistance. In this case, potential support. Since Tesla failed to hold 195, failed to hold the previous day's close as a point of support, immediately we were going to look to take this short, not long. So let's move to the 1-minute time frame and break down the entries. Scaled in entries on this trade, and we did so perfectly. This was beautiful, beautiful. So opening rally, again, opening trend line, opening rally gets sold. Now, could we have gone short on this drop right here? Yeah, we could have. That would have been something that we could have done. We didn't know at that time that low of day was going to break, and we didn't know that it was going to extend all the way down. I didn't want to take it short over here because the previous day's close was there, and that was going to be potential support. So missing this drop here caused us to miss the rest of this move down and then all the way down to here. Now, I do not like chasing trades down. What I was looking for, remember we were trading live this morning, what I was looking for was a rally back up to take this short. But I saw Tesla start to kind of consolidate rather than give us an opening rally or a rally back up. So what I did not want to do was miss out on this trade. Now, a way to mitigate risk but still be able to get some skin in the game is by scaling into the trade. Understanding that it could still push up higher, which it did, and go against our short position, but we have the ability by entering with a small position size to start to scale into that trade, effectively lowering our cost basis to put us at a good position for when this uptrend does reverse. So Tesla breaks below the 195 level, breaks below the previous day's close. Us not wanting to miss this in case if it did give us another drop from here, we went ahead and took our short entry at the top of this candle. Not the best entry price, but we knew that we were going to scale in on this. So take our first short entry there. Now, what I see a lot of beginner traders doing, or a lot of traders doing that aren't familiar with scaling in, is they'll get the drop down, right? Because we entered and we were green immediately. We were green this entire time. But when it rallies back up to their entry point, rather than waiting and staying patient, they add more at that point. And this is not how you properly scale in, because you're doing nothing for your cost basis at that time other than adding to the same entry price that you already have. So the whole point of scaling in is to lower your cost basis in the event that the stock moves against your position. Now, this is very different from adding to a losing position. We planned to do this. So if we were to add into Tesla short right here, was not going to make a whole lot of sense for us because we've already got a short entry at that price point. So we're not doing anything for our cost basis there. So we wait. We let Tesla rally up and we averaged into the position short as it crossed back over 195. Now, where was our stop loss placed this entire time? The previous low of day here, just after the open, is our new point of resistance. So I averaged in short right here because I was thinking, sometimes stocks fake out, sometimes it breaks over the PDC and decides to invalidate it, thinking that it's going to continue up, but actually fakes out. So it was a good entry to take a short position with in mind that we were going to add to this position all the way up to the previous low of day at 196.5. That was our immediate stop loss. That was our absolute stop. So averaged in there, held through as this came down, rallied up again, and we took another position averaging in up here. So this whole time we're averaging in about 20 points lower than our original entry point over here. Tesla fell. I think we were pretty close to break even during this entire time. All of this consolidation here, it rallied back up, respecting the stop at 196.5. We almost took another scaled in entry. I think I was about 4 cents off from getting filled on that before this failed. By averaging in, by scaling in at different points on the way up. So initial entry here to get some skin in the game, an entry a little higher, an entry a little higher. By doing that, we are lowering our cost basis. If we were to average in here, then average in here, and average in here, we would be out of buying power by the time that this rallies up here, and we would have done nothing for lowering our cost basis, and might have only been break even by the time Tesla got way down over here, way back over here. So if you're properly scaling in, you have to be lowering your cost basis, but you need to have a defined absolute stop, a point on the chart where you will say, I'm not going to average in anymore. This is it. I don't want to put any more capital. I'm going to close the whole position out at that point. And for us, it was 196.5. Reason being is because look at all of this. Consolidation in the pre-market, that's pretty much your support area right there. Sure enough, when Tesla did rally up, it rejected almost perfectly the low of this consolidation in the pre-market before falling back down. So from here, now what happens? Now we're getting a bear flag breakdown. So we got a few things happening here. Number one, Tesla had a negative news catalyst yesterday, so a reason for it to continue to fall. Number two, this morning could not break above the $200 hold number. Reason number two. Reason number three, opening rally gets sold. And it's not just some minor sell. I mean, this is a pretty major sell down into the low of day, breaking the previous day's close. Number four, starts to rally back up and form what's known as a bear flag formation. If we look at this on the 5-minute time frame, it's a lot cleaner here. Look at this bear flag. Bear flag formation. Scaling in on the way up, initial entry to get some skin in the game, 2 entries after that to lower our cost basis, and then we get the run down into the low of day. Now, here's another common mistake that I see traders do when they're scaling in or taking scaled in trades. Because we're scaling in, the majority of this time, the majority of this position, we're down, right? We were down, I think at the peak, 16 or 17% at one point, but we knew we were scaling in. So that is daunting mentally sometimes to be down that much. And when you are down that much, what traders will tend to do after scaling in is as soon as this gets back to break even, they close the position out. They close it out. So what was the whole point then of scaling in if you're just going to close it out at break even? The whole point of scaling is to lower the cost basis so that when this does finally fall and move in your favor, you're up on the position. So when you start to get the move that you're actually looking for, don't panic sell at that time. Hold out. Trust the analysis. It is now working for you. Follow your plan. Tesla dropped down into the low of day, and this is not coincidence, or this is not something that we did on purpose. It was purely coincidence. When Tesla hit the low of day right here, our contracts after scaling in were up 20%. So we went ahead and took those profits off the table while they were offered. Now, Tesla did continue to fall from there, hitting lows of about 190.59. It seems. Could we have held through for the rest of this fall? Sure, but we were already in the position, let's see, 10, almost 30, about 35 minutes here or so. Pretty decent trade. Long time to hold a trade for what I typically do. So again, when we're offered the profits, go ahead and take it off the table, all right? That is a crash course on scaling in and how to do so properly. So a couple of key takeaways here. Number one, when you're scaling in, make sure you're actually scaling in with lowering your cost basis in mind. Don't just be scaling in over here during consolidation and chop just to get more size. I mean, that does nothing for you, right? If you're scaling in, you want to be lowering your cost basis. Number two, when you are finally getting the move in the direction that you're planning or trading, don't panic sell. Trust the analysis, let the trade work out for you. Because if you've held through this long and it's finally starting to work, the worst feeling you can have is to sell this or close this at break even and then watch it run and you're like, man, I just wasted 35 minutes of my trading day in a position that I was correct on, but I didn't trust the analysis enough to hold through. That's it. Thank you for your time. Press the like button for me. If you haven't done so already, subscribe to the YouTube channel. And I hope the video has helped you out. This is course quality content. Keep this in mind. Rewatch it if you have to. Add it to your arsenal of things that you know and things that you can implement. All right. Take care. Enjoy your day. And I will see you all in chat.